Hello traders, Gary Wagner here, approximately 11 a.m. in Honolulu, 5 o'clock in New York City. It is Monday, the 25th day of June, 2012, and this is the daily report for gold and silver. Very nice showing to the upside in the precious metals markets, with gold currently trading up about $11 to $12 on the day, $15.8450 on the cash price according to Kitco, with a low of $65.50 and a high of $89.50. Silver, also very nice showing, up almost 2.5%, up 66 cents on the day, $27.66, the low $26.61 and the high $27.77. In what can best be described as a risk-off day, we have the precious metals, as I said, trading substantially higher on the day. Silver showing a very, very nice resilient move. This is currently being attributed to a couple of factors. The one thing that I find very interesting and hopeful is that we are seeing safe haven buying re-enter the market. This move has also been attributed, of course, to short covering, as well as some bargain hunting, all in the mix. Right now, we have the European countries set to hold a summit later on this week. However, there is not great expectations of anything significant coming out of that meeting. One of the predominant factors in the EU that has sparked this sell-off in the stock market was Spain, when Spain announced that it would be looking for some help in their banking sector. Traders, we are looking at a 240-minute Heikin Ashi candlestick chart of the cash gold market. And of significance, and I believe very noteworthy, is the fact that these recent lows of, call it 1520 to 1530, as you can see right in this area, they have appeared to have held. And what is interesting to me, let me draw a line across this, is as this market came up and failed to take out a couple of areas to the upside that were real strong resistance, when the market came back down, these next sets of lows that we got, and these are the most recent ones, just so happen to be higher lows. Also, when we compare these recent highs, it stalled at around 1640. We are also getting a series of higher highs. Now, why is that significant? Well, when we characterize any kind of a market in a downtrend, there's two basic characteristics that we typically will see in the marketplace. And that is, first, a series of lower highs as the marketplace trades to new lows, and also lower lows. You can see that here. We pointed this out in silver also. Now, the market really sells off sharply. This is that sharp sell-off. Matches with these lows here. It kind of meanders around, but it does start to make a series of higher highs, and as you can see, higher lows. We're currently trading around 1584. It's a solid update. And when we take a look at the market, I'm going to go ahead and blow that chart up for us. You can see that in terms of the Heikin Ashi candles themselves, we're getting what we look for in typical bottom activity. First of all, as the marketplace sells off, it's going to be characterized in a Heikin Ashi chart as having body sizes that grow. That's significant because it tells you that trend is intact and has a lot of strength. And you're also going to see the absence of these upper wicks, which simply means that it opens around the midpoint, but that becomes the high of the day on the Heikin Ashi. What we look for in a market that's bottoming is small body size and typically these doji-like candles that we are currently witnessing, as can be exhibited right in here. Now, we've had, and again, this is a short-term chart. It's only 240. The dailies haven't turned yet, but you are getting the absence of these wicks, the lower wicks, and you're getting nice body size in the candles themselves. Traders, we are looking at a 420-minute cash silver chart, standard candlestick format. I'll blow it up in a second. We might even convert it into a Heikin Ashi. Of particular interest is the fact that when we take a look at these lows that we received, and this of course is back last year, beginning of this year. This right now is the 11th of January when you see here, and that's after coming off of the record tops, as you can see right in here. What we noticed is as this market came down, we've had a low that is approximately the same as these bottom lows that you can see around the $26 mark, but they are significant to me in that they are actually higher lows in the marketplace itself. Now, when we go to blow this chart up, what you're going to see is on this one particular candle, we have seen a tremendous move to the upside. This is all within this day's trading activity. And when we convert it to our Henkin Aussie chart, and let me go ahead and do that for us, what you're going to see is also we're getting a nice type of Henkin candle. What do we look for? Same things we looked for in the gold. On the way down, the absence of the lower wicks, you get these series of small-bodied bottom action type doji candles, and then that's followed by these two bars, which are significant because this last one has lost the lower tail and it has nice body size. What I'm doing is I'm going to look for carryover in the market and see if we get a continuation of this upside trend in overseas trading today and maybe even tomorrow, because I want to issue a buy signal if we see significant confirmation that today's activity and what we saw a little bit of last week, if in fact this is not just short covering, but re-entering the market from the long side, as traders believe that we have washed out the lows and will probably head higher. We've seen this market move up only to see it get really slammed on the downside very quickly, as we saw right in here, the recent activity. We're also coming off of a marketplace, of course, which has had significant downside pressure. And then when we saw the market trade back up, we were incredibly range bound, as you can see right here. So you can see not so much reluctance to re-enter the market, but I want to get confirmation and a little bit more technical evidence that in fact this correction might be either concluding or that we're going to just see a nice upside bounce that we can trade and look to profit from it. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Tuesday for another daily update and review. Bye-bye.
You got to pick up every